Good evening, everyone. Welcome to this webinar. I hope all of you are able to see my screen and listen to my voice clearly. Please message me in the chat box if you're having difficulties with the voice or video. So, welcome to this session on option strategies using order flow and open interest analysis. So, I am Abhishek, a SEBI registered research analyst. Please note that all the contents in this session and the information provided afterwards is only for your learning purposes and should not be considered as investment advice. Please note that stock markets are risky and registration granted by SEBI, enlistment with BSc or certification granted by NISM in no way guarantees any profitability or assurance of returns. There is no assurance of returns in the markets as stock markets are risky, and please read all the related documents carefully. So in today's session, this is going to be the first of a few sessions that I will be hosting periodically for the GoCharting audience on how can one use order flow analysis efficiently, or and how can one use open interest analysis to identify certain situations, certain setups in the markets that have a higher probability of giving a strong move, and how to basically decode data. So, in today's session, we'll first be starting off with a couple of simple pointers, basic pointers about volume profile analysis, and then we'll move to order flow and open interest as needed if time permits. Now, one of my favorite kinds of setups. So, there are when it comes to day trading, there are basically two kinds of traders. You have trend followers who follow the trend of a higher time frame. So, if the market is downtrending on a higher time frame, they like to only take short trades. If the market is uptrending on a higher time frame, they like to take only long trades. And the second kind of traders are those who we call mean reversion traders. They basically like to play reversals in the markets, expecting a reversal. I am neither of these. I am more of a structure-based trader. My primary focus of analysis is based on market structures. That is, I use certain tools. One of them primarily being volume profile to identify and understand what are the crucial reference points, what are crucial supports and resistances on an intraday basis, and then from there identify what kind of possible move can come and confirm it using order flow analysis. Yes, audio is on. This webinar is also being recorded and this will be shared with the participants soon in a location where they can access. So don't worry about that. Now, how many of you are familiar with volume profile here? How many of you regularly use volume profile? So as always, I like to keep this sessions interactive, and I like to keep it both way instead of me just talking and explaining something endlessly. I like to make sure that responses are both the sides. I will be taking Q&A at the end. Okay, so in the meanwhile, if you have any question, please type in the chat box and please respond to my queries also in the chat box. So we have a lot of people using volume profile here. Okay, um, even I use volume profile. I use volume profile extensively. This is one of my primary tools of analysis. So one of the most important aspects, a basic but very important building block of volume profile analysis, is your profile shape and the POC placement, the point of control placement. We have a gentleman requesting in Hindi. The reason why I'm keeping the webinar in English is to make sure that everyone from multiple states understand. In the future, if possible, I will also conduct a webinar in Hindi separately for the Hindi audience. Okay, so you mainly have three important components of volume profile. But now, before that, let's talk what exactly is volume profile in general. Volume profile is nothing but volume at price. Okay, so when you go to study This is your traditional volume indicator, right? This is your regular volume indicator that tells you how much quantity of a particular stock or a futures has been traded on a particular candle. So you go to 15 minutes, you see that this volume that you are seeing here on this bar, for example, which is being shown here, is 590,000, 5,90,000, and then 4,65,000, right? So this indicator, this volume indicator, basically is your simple volume indicator that talks about volumes at price at time. Sorry. So if it's a 15 minutes bar, it shows the volumes that are being traded in 15 minutes. If it's 30 minutes and 30 minutes, any candlestick that you basically keep on the chart. And alternate to this, now if I'm going back to 5 minutes, you see the volumes on every 5-minute candle. It doesn't matter whether the price is moving up or down, the indicator shows you the total volumes. Clear, simple, basic volume. Now, an alternate to this is called as your volume profile. If you see, instead of the bars present vertically, these bars are present horizontally to the side here. And these volume bars look a bit similar to this volume bars as well for you. So the location placement, if you at the first glance, you see that the way they are placed is different. Instead of present at volume at time, they are present here. Volume profile, as I said, is called as volume at price. So the advantage of using volume profile over traditional volume bars is that it doesn't take the time element into consideration. It takes the time period element into consideration. That is, you can use it on a daily basis, on a weekly basis, on a monthly basis, or any price range that you prefer. But when I say that I'm using it on daily basis, it doesn't consider these volume bars that you are seeing here, this particular bars at every price level. For example, so when I'm zooming in, if you see this volume bar, for example, here, it the range is 2616 to 26011, which is a 5 point range. So you see this block, volume block for 5 points. So this particular volume block of 5 points, because I'm using daily settings here or a session settings, essentially records all the volume that is traded between 26,011 to 26,016 futures level, because this is Nifty futures chart, irrespective of the time. If you see this price level, you saw that Nifty futures was trading at this price level at 12 p.m. once, 12:05, and then 12:25, 12:30, 12:40, and also somewhere around 2:30 here. So you see this price level being visited by price multiple times during the day. Each and every time price is going to this area, this bar is getting updated with the volumes that are getting tracked. So basically, you don't see a time element. You see much more importance being given to the price element than the time element. So I can identify what are my important price levels without the time factor coming in, because on a from a broader perspective, time is of less importance to me than price is, considering the fact that there are multiple time frame market participants who trade in the market. Just because you and I are intraday traders who trade on 5 minutes time frame doesn't mean that everyone who's participating in the markets, who's buying and selling in the markets, is also trading on a 5 minute basis. They can trade on a 15 minutes time frame, or some of them are BTST traders, some of them are swing traders or long term investors. But their volumes are also important to me at specific price points, because traders who trade on a slightly higher time frame usually trigger trend changes, institutions. So this tool helps me identify those areas where I see large volumes coming in, mainly triggered by institutional participants, without the role of the time. Now, within this volume profile itself, just a quick overview to you, there are three main components. You see that the color of the profile at one point is yellow, and here it is darker, and you're seeing a red line in between. So the yellow part is called as my value area. Value area is where 68% of my day's volumes are traded. That is, if this is my entire day's profile, 68% of the volume activity was traded in this region for me yesterday. So the day's range of yesterday is, for example, the day low is 25,842. The day high is 26,061, which is roughly around 180 points for me. This is the 180 points range was made by Nifty Futures yesterday. So within this 180 points range, this area 25,980 to 25,848, roughly 120 points. This is where I see the highest volumes traded yesterday as per volume profile. So I would give more importance to this area, the kind of volume activity that is happening over here. If price is in this region, before before I give importance to any other region. So this is my value area, the 68% range. The other part is my outside value area, the remaining 32%, where the 32% of the volumes are traded. Within the value area and the total day, the single price point where the highest volumes are traded is my red line. This is called as my point of control. So this red line is where my highest volumes are traded yesterday, which is 25,862, and today it is 26,010. So I mainly use a combination of within volume profile, value area structure, plus point of control, plus current day opening. Opening is my most favorite time to mainly trade. The opening 15 to 45 minutes is my most favorite time to trade because of a higher volatility and much more scope of a larger price movement as a day trader. So one element that I use when it comes to volume profile or value area analysis, again, the entire concept of volume profile is something that has to be taught on at least 7 or 8 hours of sessions, at least basic. But what we are looking at is the basics of it, one particular concept of it that you can learn and explore by yourself. So what I look at initially within volume profile is my volume profile shape and structure. That is, I see if this is my entire volume profile, if my value area is to the bottom. So you see that the value area is to the bottom, and in this case my value area is to the top. So if you look at it, the first one looks like the alphabet B, and the second one looks like alphabet P. Clear? So this helps me understand. So when I see a B profile or a P profile, I call these trend profiles. Okay, I call these profile structures trend profile structures. So when I see a B profile or a P profile, I also look at the closing of the profile, closing price. So a B profile is essentially when I see that price opened at one end and closed lower at the lows, when it closed at day's lows, and there is a B-shaped profile. This B becomes a distribution profile or a selling profile. It tells that we saw a lot of selling activity happening on this particular day. It's a bearish uh, profile structure. If price opens at one point and then closes all the way to the other end, and my profile structure is P shape, that is my price is closing at day high, it is a P structure P profile, which is a bullish profile structure. Again, I don't look at this on an intraday basis. So for a particular day, what I do is I look at the previous day's profile structure. So for example, for today, this is yesterday and this is today. For today, my profile structure of yesterday is a B structure profile with my closing at lows. It tells me that. So why exactly does a B shape profile structure with a closing at lows mean imply that it's a bearish profile or a distribution profile? Because you see price opening at one point, moving to the highs, and then from all the way from the highs it started coming to the lows. So in spite of the large down move, you see that the value area is to the bottom end, not at the top end. This implies that there is a strong volume activity, a higher interest of big players or institutions at the lower price range with a close at lows. So this tells that in spite of the down move, we saw a larger selling activity in the bottom end by institutional players, which suggests a bearish profile. So whenever I see a bearish profile, according to textbook volume profile analysis, when there is a bearish profile and the closes at the lows, there is a higher probability of the market continuing the downtrend on the next day. This is the textbook volume profile analysis. And it happens a lot of times. But within this small concept, so the opposite side of it is my bullish profile, the P-shaped profile. So price opened at one end and then trended all the way to the upside. So in spite of the large up move, we are seeing a higher interest of large institutional volumes to the upper end as signified by your value area here. And the close is also near highs, which suggests a bullish volume profile structure. So as I was saying, this is your textbook volume profile analysis. But within this, one particular method that I follow is the concept of false breakdowns or false breakdowns. If you see, yesterday's profile was a B-shaped profile, good distribution activity happened, and more so over on expiry days, this particular setup that I use works even better. So yesterday's profile was a B-shaped profile, and then we started, and the close was also at lows, indicating a negative bias. Today we opened inside the previous day's range and we made this large bar. So I would say a lot of participants would have entered shorts at this point. A lot of traders would have entered shorts at this point because this is also your previous day's low. Previous day's low is breaking. Price action is telling that it is a downtrending day. Am I right? Anyone? Any questions so far? No? So your typical price action would indicate that this is going to be a downtrending day. There's a higher possibility of us moving lower because we broke through previous day's low. The trend is also negative. But what exactly are the volumes driving this trend telling? So we are using volume profile to look at the broad market structure. But if I am saying this is my important support area, which is my previous day's low, previous day's value area is also being broken by price, which is a bearish profile. My point of control is also getting broken. This is from a structural perspective. But what is the force? What is the impact of the volumes driving this down move? Are we seeing any big players selling? Are we seeing any large market participants selling in this down move? Or are they waiting? Or we don't see any action from them? That is something I like to confirm using footprint charts or your order flow charts in live markets. Okay, so I'm not sure how many of you follow my updates in live markets every day. Today, I was telling from the morning when this down move is happening that the selling does not look confident to me. I'm not confident looking at this selling. There is a good possibility that the markets can bounce from this point. Why? Because if I look at my footprint charts, this is a footprint chart that I look at. How many of you use footprint charts? Okay, a lot of people use footprint charts. Good. So basically, footprint charts will tell you, footprint or order flow charts basically tell you what are the volumes that are being traded at every price point in live markets. So using, if one uses footprint charts the right way, there are again multiple methods of it, but if one uses it in the proper way, the way it is meant to use, using a series of techniques, they can identify if in an up move, if there is a strong market buying activity by institutions or large players, or if the market is coming down, are we seeing any institutions selling? So if you look at footprint charts in the same candle, using just by looking at this bar, I could say that when price is breaking through my previous day's low, that there is no strong selling happening. I'm not confident looking at these numbers in my footprint charts there. So why? What exactly was in the footprint charts or that helped me come to this conclusion that there is a high possibility that the markets can reverse from this point. So step one, again, for those who don't know about footprint charts, just a quick basic. Again, even this is not something that you can learn in one session. It is a very in-depth and an advanced concept. The left side is your bid side and the right side is your ask side of your footprint charts. The left side, basically the default settings, contains the orders initiated by market sellers and limit buyers. The left side, your bid side, will see orders that are initiated by market sellers and limit buyers. Your right side, your ask side, sees orders that are initiated by market buyers and limit sellers. So there are basically two kinds of buying and selling activity that happens in the markets. The first one is your limit buying or selling, that is traders or market participants who place limit orders. The other kind are your traders or market participants who buy and sell at markets. Now, there is a very important role of both these participants. The limit traders, the buyers and sellers who place orders at limit prices, basically provide liquidity to you, and the participants who enter at market prices, these are the ones who drive the price up or down. These are the ones who trigger an up move or a down move. Just a small basic understanding for you. Okay. Now, using order flow, I identify if I'm seeing more of market buying activity or market selling activity, and if there are any limit participants who are trying to stop the move. And so basically, what kind of move is happening? Who's in control of the markets, buyers or sellers? And am I seeing aggressive buying at market or aggressive selling at market? And if it is just being done by retail traders, or if I am seeing large institutional participation through my footprint charts. This is what I look at. So when I look at this bar, as I said, my left side, my bid side bar indicates market selling activity and my limit buying activity. Using, you see this purple highlighted bars, using certain settings, this mostly identifies market selling activity for me. Not always, but mostly. These numbers tell me that the activity by market selling is rather weak. I'm not seeing strong market selling activity here. Now, as I said, this strategy or setup that I'm looking at is for my false breakdowns or false breakouts. So I'm seeing a breakdown happening. I am using order flow charts to identify if this is going to be a strong breakdown where I'm seeing big players selling aggressively when the previous day's low is broken. Am I seeing any large players selling or not? I don't see any large players selling in this particular bar. So price starts moving down. Understand that yesterday's profile was a B-shaped profile, a distribution profile. So price comes down, and then because I'm not seeing any strong selling activity, and immediately price goes back into the previous day's range. This is my first confirmation of a price reversal, because yesterday's trend structure was bearish, but I am not seeing a follow through by sellers today. So sellers are not interested to sell further today. So there is a good chance that the market will reverse from now here, and because it is expiry, everyone who was short from yesterday will be running to cover their positions. Even though it is Sensex expiry, I look at Nifty futures chart mainly because Sensex futures doesn't offer enough liquidity for me to uh, use order flow there. Clear? Any questions so far? Uh, I hope everyone is able to hear my voice. Anurag, my voice is clear. Everyone is hearing. So can you please check your settings? Anyone, any questions? So how did you confirm that there are not enough sellers? So when you look at this chart, again, these numbers that you are seeing 86 and 40. So according to my footprint chart settings, so for a range of 4 points, so I have set my footprint charts in such a way that this shows me the information once in every 4 points range. That is, for every 4 points, the volumes that are being traded in is shown by the order flow chart. So when I look at this chart, when I look at the bid versus the ask side, I you should always be looking at them matching the numbers diagonally. So 68 bits versus 21 asks, 24 bits, 11 asks, 40 bits, 0 asks. So when you look at these numbers simply don't add up for the kind of selling activity you would see in a B-shaped profile follow through there. Clear? So this is what, so as I said, this setup that we will be discussing today is about focusing on false breakouts and false breakdowns, something that is happening commonly in the markets nowadays. So the trend is indicating a down move possibility is high by the close of the day before. But in live markets, it did not happen simply. I'm not seeing sellers presence. So there is, so basically a lot of, as I said before, a lot of retail traders would have also jumped into buy put options or sell call options in this particular down move. And then in this up move, everyone who was short from yesterday, a lot of participants who were short from yesterday basically got trapped because we saw a new bunch of buyers coming in. Clear? Someone asked, can you show me examples of heavy selling? That's a good question. Look at these numbers. I can even reduce the tick size if you want more clarity, or even increase it for you. Look at these numbers, these imbalances that you see within a smaller price range versus the numbers that you saw today. It simply doesn't add up. Clear? What is the indicator name that you are using? This is not an indicator, this is a type of candlestick that I use called the footprint charts. And then, so this at this point was my first confirmation that there is a high chance of price reversal. And then when price started moving up, even these guys who were eager to sell into the markets at this point of time, apart from these sellers yesterday who sold here, because price is now going above their head, there is a good chance that they are going to get trapped. Clear? Or any questions? This chart template, yes, I will be sharing the standard footprint chart template that I use. Don't worry. Last candle is a buying candle. Which candle? Why are some in purple and some in brown color? What do they denote? Good question. So footprint charts basically has a feature where if the volume on one side is higher than the volume on the other side by a certain percentage, then it basically identifies. So here if you see, if I keep an imbalance of 500% and you're seeing certain purple blocks here. So if the volume on the bid side is greater than the volume on the ask side by 5 times, then this particular block gets highlighted. Or if the volume on the ask side is greater than the volume on the bid side by five times, more than 5 times. So 563 is almost is greater than 10 times of 55 here, right? So whenever the volume on one side is greater than the volume on the other side by more than 5 times, then you see this charts being highlighted. So some people use 300%, some use 500%. I personally prefer 500% imbalances. Again, as I always say, the key here is not just looking blindly at imbalances, because I see a lot of people do that. They see two or three imbalances on the bid side, they think, all right, there is a lot of selling going on, let me short. Or they see a lot of 3 4 imbalances on the ask side, they think, okay, I'm seeing market buying happening, so let me buy. No, it doesn't work that way. You also need to read between the lines of the footprint charts on what exactly the order flow data is telling at that point for you there, especially in markets like this. In a trend following market, it is simple. But in the kind of markets that we are right now, at least from the last 1 to 2 years, how you read order flow data matters the most there for you. So one another example that I wanted to give you is, where is it? Where is it? Just a second. I had it here. One moment, guys. So if you see the here on 5th of December, the profile structure is P and the closes also had highs. And then right from the open, the market started cracking down. So I wasn't that available on this day on 8th because of some personal reasons. But if you look at the footprint charts of 8th, you will see the same thing. Now, when you look at each bar, both from a collective basis and from an individual tick size perspective, are you seeing higher volumes on the bid side or on the ask side? And what are the number of imbalances and how frequent are they occurring for you? This bar, for example, or even this bar gives you much more clarity. So you see 450 lots being sold aggressively versus only 10 lots on the other side that was there at that point to provide liquidity. So price immediately started moving down for you. Clear? How do we take decision buying entry point and exit point based on which chart? You combine both volume profile and order flow. So one technique I use based on footprint charts is using a certain number of blocks as my settings. What I do is I keep it, for example, I prefer to use a two block rule, or in some exceptional cases a four block rule. That is four blocks of my footprint charts. Each block is 4 points, so 16 points in futures. For example, for small intraday trades, as my initial entry trigger and my stop loss, and my targets would be based on if it's at the open of the day, the first half of my session, then the previous day's volume profile ranges. If it's my second half of the session, and if it is a reversal, since today's session we are talking about reversals, I like to look at the previous footprint points. One second. Some people have raised hands for questions. Let me take it. Sachin, please go ahead. Arka, please go ahead.
Hi, sir. Can you hear me?
Yeah.
Yeah, so can you explain the reason why you prefer the volume structure instead of the market structure?
See, again, this is how do I say it? It is a personal preference of traders. So most of the traders who use market profile also tend to use volume profile along with their market profile charts. But I
Okay,
personally
okay,
prefer using volume profiles because for me, I give much more importance or give much more preference to volumes rather than time plus volumes. Market profile is basically looking at your market structure not just from a volume but from mainly from a time perspective. That's why it is TPO, time price
uh,
opportunity.
yeah,
It's, I would say, personal
okay,
preference. It works. Using volume profile alone works much better for me.
okay, okay, okay. Thank you.
Please mute yourself once the question is done. Manjunath, please go ahead.
Sir, basically, in order flow,
Yeah.
yeah, volume profile, and even if we use the candlesticks also would help us. The candlestick representation would
Could you
help
please
us.
be a bit louder, sir? I'm not able to hear you.
Yeah, while using order flow,
Mhm.
even if we use a candlestick representation, would that help us?
This is basically a candlestick representation, right? I see candles, and
Yeah,
inside the candles, I'm seeing the buying and selling activity that is happening.
like we have candlesticks, right? Patterns
Yeah.
like bullish. bearish candles actually.
Correct.
Even does that mean do we even that helps us or not, or we should better go with the order flow structure only?
I would say better to go with order flow structure.
Yes, cool. Thank you. Yeah, yeah,
Thank you. Because like the example that I was showing for today, the candle is a large red candle, a textbook bearish candle that formed.
yeah.
But then the volumes indicated that there was not much selling activity that happened.
Sure, sir. Sure, sir. Thank you. Yeah.
One moment. I'll take a couple more questions before I summarize. Paramjit Singh ji, please go ahead. Okay, anyone else? Yes, please go ahead.
Good evening. Uh,
Yes.
m- my question is like how to look for reversals and pullback.
How to look for reversals and
Pullback.
pullback. Okay,
Yeah.
all right. So one reversal that we spoke about today is your false breakout and false breakdown reversals, right? You look for a trend-based profile shape of the previous day, a bearish profile shape with a close at lows, or a P-shaped bullish profile with a close at highs, and then you confirm it. You correlate it with the live market order flow data, which tells you whether there is going to be a trend continuation or not. But if you want to identify the markets where a higher amount of pullbacks occur, one simple way to look at it is again through your order flow. See what kind of volumes are coming in. Do you actually see a follow through of buying activity happening or a follow through of selling activity happening on the same principles that I explained you some time back? Okay, I got a chat
Yes,
question.
okay.
Someone asked, how do you trade D profiles? A good question. D profiles like this, as long as price is within the previous day's range, my logic would be simple. If price is at the previous day's high, I look for selling opportunities. If price is at previous day's low, I look for buying opportunities. Unless I see a breakout or breakdown confirmed with high volume activity as per order flow. As long as it is within the range, I don't guess when it is going to go out of the range. As long as it is within the range, I simply play the range. Previous day high and previous day's low references. Okay. To give a quick summary, what we discussed today was a quick overview of volume profile with profile shapes, that is a B shaped profile with a lower close or a P shaped profile with a higher close. What goes into volume profile? What is your value area? What is your point of control and its importance? And the next day, how to identify false breakouts and false breakdowns. Okay. Now, someone was asking me about the update that I shared today in my Telegram. Just to give you a quick sneak peek into a small update here that I shared. So I even shared it on my Twitter profile. So this was the update at 9:55 that I'm not convinced with selling as per order flow, and why I was looking at a long option trade in my calls rather than uh, buying put options here. So I will be sharing my social media where I share important updates here in the chat. So you can click on the link and join for daily updates. Apart from that, I also host a research community where I share my trade recommendations, and I also host a learning program where I teach about volume profile and order flow analysis from the basics to the advanced in depth over a period of 10 days. So I will be sharing the links of both so that you can reach out to me if you are interested in signing up for the program. Okay, so even if you open the telegram of GoCharting, you will see my social media profile links there. So feel free to follow me over there and reach out to me if you have any further questions. I will also be sharing this recording shortly so that you can access it. I will also be sharing the schedule for the next complimentary webinar shortly, and also what we are going to discuss from a volume analysis perspective there. Thank you all for joining this webinar. I hope you got to learn something new, different, and I hope it was informative to you. So please let me know if you have any questions, and you can join my Telegram community even from where you can message me. Okay, thank you all, and speak to you soon.